Greetings, fellow financial adventurers. Welcome to our channel Snap Savings, your fortress of financial wisdom.
Did you know that a recent study found that over 70% of Americans have used overdraft protection at some point in their lives? This staggering statistic highlights the prevalence of overdraft usage and the importance of understanding this financial tool. Overdraft protection can be a valuable safety net, providing a cushion for unexpected expenses and preventing the embarrassment of declined transactions. However, it can also be a slippery slope, leading to a cycle of fees and debt if not managed responsibly. In this essay, we'll delve into the world of overdrafts, exploring their benefits, risks, and strategies for using them wisely. Overdraft protection is a service that allows you to continue using your debit card or withdrawing cash, even when you don't have enough money in your checking account. It acts as a safety net, preventing declined transactions and the potential embarrassment or inconvenience that comes with them. When you overdraw your account, the bank or credit union essentially provides you with a short-term loan to cover the difference. This can be helpful in a pinch, but it's important to remember that this loan comes with fees and interest charges. Think of overdraft protection as a safety net suspended above a financial tightrope. It's there to catch you if you make a misstep, but it's not a permanent solution. Relying too heavily on this safety net can lead to a false sense of security, preventing you from addressing the root causes of your financial instability. Just as a tightrope walker needs to maintain their balance and focus on their steps, you need to carefully manage your finances to avoid over-reliance on overdraft protection. There are two main types of overdraft protection: standard overdraft coverage and linked account overdraft protection. Standard overdraft coverage is typically what comes with a checking account, and it kicks in automatically when you overdraw. Linked account overdraft protection, on the other hand, requires you to link your checking account to another account, such as a savings account or credit card. If you overdraw your checking account, funds are automatically transferred from the linked account to cover the difference. Understanding the different types of overdraft protection is essential for making informed decisions about your finances. Before opting in for any overdraft service, carefully review the terms and conditions, including the fees associated with each transaction. By being aware of the potential costs and benefits, you can make choices that align with your financial goals and help you avoid unnecessary debt. Remember, knowledge is power when it comes to managing your money. Overdraft protection offers undeniable convenience in our fast-paced world, where financial transactions occur seamlessly and often without much thought. Picture this. You're rushing to pick up your child from daycare after a long day at work. You stop by the grocery store to grab a few essentials for dinner, only to realize at checkout that you've forgotten your wallet. In this scenario, overdraft protection could save the day, allowing you to complete the purchase and avoid the stress and inconvenience of retracing your steps. The beauty of overdraft protection lies in its ability to provide a safety net for those unexpected moments when you need it most. Whether it's a forgotten bill payment, an unexpected car repair, or a medical emergency, overdraft protection can help you navigate these situations without the added burden of declined transactions. It offers peace of mind, knowing that you have a backup plan in case of unforeseen circumstances. Furthermore, overdraft protection can help you avoid the negative consequences associated with bounced checks or declined debit card transactions. These consequences can range from merchant fees and potential damage to your credit score to the embarrassment of having your card declined at the point of sale. With overdraft protection, you can maintain a positive payment history and avoid the hassle of dealing with these repercussions. However, it's important to remember that the convenience of overdraft protection should not overshadow the importance of responsible financial management. While it can be a valuable tool in a pinch, it's not a substitute for budgeting, saving, and living within your means. Over-reliance on overdraft protection can lead to a false sense of financial security and prevent you from addressing underlying spending habits that may be contributing to your financial stress. Section 4. The potential pitfalls of overdraft protection, fees, and debt accumulation. While overdraft protection can provide a safety net for unexpected expenses, it's crucial to be aware of the potential pitfalls associated with its use. One of the most significant drawbacks is the high cost of overdraft fees. Banks and credit unions typically charge a fee for each transaction that overdraws your account, and these fees can quickly add up, especially if you're not carefully monitoring your balance. Imagine this. You go out for coffee and a pastry totaling $10. Unbeknownst to you, your account balance is only $5. With overdraft protection, the transaction goes through, but you're hit with a $35 overdraft fee. Suddenly, that $10 indulgence has cost you $45, a hefty price to pay for a small treat. This example highlights how quickly overdraft fees can erode your finances, especially for those living paycheck to paycheck. Moreover, repeated overdrafts can lead to a cycle of debt that can be difficult to break free from. Each time you overdraw your account, you're essentially borrowing money from the bank, and this debt accumulates over time, especially if you're unable to pay back the overdraft fees and the overdrawn amount promptly. This can create a snowball effect, where you're constantly playing catch-up and struggling to make ends meet. Furthermore, excessive overdraft usage can be a red flag for lenders, potentially harming your creditworthiness. While overdraft protection itself doesn't directly impact your credit score, frequent overdrafts can be an indicator of poor financial management. This can make it challenging to secure loans, rent an apartment, or even get a job in the future. It's essential to remember that building and maintaining a positive financial history is crucial for long-term financial well-being. Section 5. Weighing the pros and cons. When overdraft protection makes sense. Deciding whether or not to opt for overdraft protection requires careful consideration of your individual financial circumstances and spending habits. It's not a one-size-fits-all solution, and what works for one person may not be the best approach for another. Before making a decision, it's important to weigh the potential benefits and drawbacks to determine if overdraft protection aligns with your financial goals. For individuals who are prone to occasional oversights or who have irregular income streams, overdraft protection can provide a valuable safety net, preventing the inconvenience and potential consequences of declined transactions. For example, freelancers or gig workers who may experience fluctuations in their income could benefit from the peace of mind that comes with knowing their transactions will be covered, even during lean periods. Moreover, overdraft protection can be a useful tool for managing emergencies or unexpected expenses. Life is full of surprises, and sometimes these surprises come with a hefty price tag. Whether it's a medical emergency, a car repair, or a home appliance malfunction, overdraft protection can provide a financial cushion to navigate these unexpected events without derailing your finances. However, for individuals who struggle with overspending or who have a history of racking up overdraft fees, opting out of overdraft protection might be the more prudent choice. This might seem counterintuitive, but it can be an effective way to force yourself to live within your means and avoid the cycle of debt that can result from excessive overdraft usage. By opting out, you're essentially establishing a hard limit on your spending, compelling you to be more mindful of your finances. Section 6. Responsible overdraft management. Tips for avoiding excessive fees. If you choose to utilize overdraft protection, it's crucial to do so responsibly to avoid excessive fees and potential debt. By implementing a few key strategies, you can harness the benefits of this service while minimizing the risks associated with overdrafts. Remember, overdraft protection should be viewed as a safety net, not a crutch, and responsible management is key to maintaining financial stability. First and foremost, diligently monitor your account balance regularly. Technology has made it easier than ever to keep track of your finances on the go. Most banks offer mobile banking apps that allow you to check your balance, view recent transactions, and set up account alerts. By staying informed about your account activity, you can avoid overspending and minimize the likelihood of incurring overdraft fees. Consider setting up low balance alerts to receive notifications when your account balance dips below a certain threshold. This proactive approach can help you avoid accidentally overdrawing your account and give you time to transfer funds or adjust your spending accordingly. Many banks offer customizable alert options, allowing you to tailor the notification settings to your specific needs and preferences. Another effective strategy is to link your checking account to a savings account or credit card for overdraft protection. This way, if you do overdraw your checking account, funds will be automatically transferred from your linked account to cover the difference, often at a lower fee than standard overdraft coverage. This approach can provide an extra layer of protection, ensuring that your transactions are honored while minimizing potential fees.
Don't forget to like, share, and subscribe for more profound insights into mastering your financial journey.